Hello, 12th day of February 2018. My name is Derek and welcome. Everything within your own risk, own reward. Keeping a quick look on this 2-hour time frame for Bitcoin, which is still testing this area in here, which it had earlier today, coinciding with these levels in here or previous resistance points before. And we'll see how it does. It's in the high 8,000s now, and I think this has the possible leeway to go to 10,000. I'm in a Fibonacci state of mind right now because, well, I found, well, someone told me rather, a third mathematical formula for calculating Fibonacci downside, which is a downtrend, something like this, 20,000 down to 6. And then any rally that it has from its lows. Now, when I did this before, I was thinking, how do I calculate downside? I said to myself, and I know it's the polar opposite of upside, so da-ding, just do the polar opposite equation. It worked. And I used that for quite some time, which was 1 divided by, because I'm using the opposite of what I normally did, which was the highest price divided by the lowest price. And in this case, it would have been 1 divided by L, actually. Divided by, so this is even wrong here, the top one. 1 divided by, and then on this whole thing, you needed 1 divided by low, divided by 1 divided by high, to the root of 1.618, and the dots represent all the decimals after that. We're going to talk about that very soon. Oh boy, that's a big number. Multiply, which in this case is 1 divided by the high. That's what I did. So yeah, this is a little more extra to it. And then months ago, I just tried, well, what happens if I do the Fibonacci formula and just make this a negative number on the 61.8, and I was amazed to see it got the exact same result. But also, if you take low divided by high to the root of the positive 61.8 and multiply it by the low, you get the same number. Now the golden ratio, beautiful, beautiful thing, because just quickly doing a Google search moments ago, I did a search for Fibonacci ratio many decimals. So I have 5 to 20,000 places, that's it, and 1 million places. That's pretty good. This is a lot of decimals right here. It gets even larger than that. This is from www.cs.arizona.edu, so Arizona University, I would think. Arizona State, one of them. I think if it was Arizona State, it would probably say Arizona State, but that's irrelevant for the most part. This was updated last March 27th, 1996. At that point, I have yet to have had the internet at my home. The only time I had ever used the internet at this time frame would have been the year before. And maybe even that day, actually. I probably might have used it that day. I used it during the fall of 95 and the, well, up until April of 96, because that's when I finished school that year. And then I would have used, well, that's when I would have used the internet. So this is a long time ago, the early infancy days of the internet. Didn't take me long after that, maybe within 1.5 years when I stated the internet was going to probably get big. This is the golden ratio. 1.61803398847498994, and the numbers go on further and further and further. I'm going to scroll down. This is, my brain is going through, I don't know what it's going through right now. How can anyone calculate this? This is beyond magnificent. What kind of computer would have been needed to do this? I am so amazed by epic proportions, the amount of decimal places that are used as I still continue to go on. These numbers are all copy and pastable. But I'm just going to scroll down fast how anyone can actually calculate a number. The furthest they have gotten to is to this 71 ... These numbers will keep on going forever. That's the best part. That's why if you truly love infinity, this thing could never stop. So for me to see that somebody has actually calculated a number this big, and I've tried to think for myself, I wonder how big this, I know how big you can get to infinity, but I've always wanted to calculate it to see how far I could get. And wow, I could never even get this close. No way, no how. Fibonacci works in so many different ways. It is magnificent. Let's take a look at a few alternate coins. Maybe we can find some Fibonacci analysis. I haven't looked at these charts, at least in a while. The top gainers on Bittrex represent, well, first they'll show me the losers. Geocoin is the only one down in double-digit percentages. The best of the page one losers is down 4.5%. The top gainer, Golos. I don't own any of those. I don't own any Bit crystals. I own IO coin. I should own Ethereum Classic, but I don't. I don't own many of these coins in here, actually, which is fine. I'll take a look at the top three: Golos, Bit crystals, and IOC. First, we're going to take a look at IOC, which just happens to be the first because that's the one that I own, and I can quickly click on it because it's on my watch list. So in the 2-hour time frame, it's had a nice little push. It hasn't given that much of it back, not as of yet. Take a look at this on a daily time frame. So I'm looking to sell when this thing gets above the 18 average of highs. That's not where that's at. It's at the 18 average of highs, but it's not well above it. I mean, it technically got above it, but that's my book, that's barely getting above. When you look at moves leaving the band, breaking higher, at what stage is it clear that it broke? Because in here and anywhere above it was clear. So here it would be clear that it has now gotten above this, and I can start, keyword is start, looking for sell opportunities. I'm not going to sell them all. I'm going to sell about 2/9 of my holdings on my first positions, reducing them with small amounts on each sale thereafter. On my original sale, barely above the 18 average of highs, I'd like to buy back. I could do the 18 average of lows, or I could do a small pierce below, either or. If you do a small pierce below, you got a less shot at hitting it, but you get a much better percentage gain within the play. Next up, let's take a look at GOL, Golos. And I don't know why I didn't buy this. I did look at a bunch, and I passed on more of the lower volume ones. I also passed on the ones that I thought were, just by looking at it, more risky. This one, not nice. No, most ones that looked worse than this long term. However, this is a situation where you have your sell orders in, and it happens to be, if you had it under 2,300, I usually do those even numbers. This got up to 2,300 even. That's why if I wanted to sell at 23, I'm going to put an order for like 22.90 something. And if I had them and I put a sell order there, that's what I would have done. Now, I most likely would have picked the 22 handle. just because the bottom tip of this is 21.15, so 22 would represent a safer sale, and that's still an area where you can profit. If you were to have a situation where you sold between 22 and 23 here, you see the price at 19, I often wonder, you know what, should I just buy it back now? And if you knew something about this original pump and the original wave of selling is over, then yeah, for sure, you can buy it back. But I would look to get a much lower price in such. Now in a case like, well, also too, when these downtrends happen like this, it can take a little bit of work at times. I know the altcoins can be more trickier and they can just go when they want. But after you see a decent size push down like you do here, and you have a quick little move up like we see here on a bullish level, I think what I've usually seen on the history is when it makes a quick move like this, that it's going to resettle this range a little bit for 4, 5, 6 days. Let's go on to the next one. Now that doesn't mean it's going to do that, because it could just do something like this and just go straight up. There's nothing stopping it. Like I say, with these lower volume altcoins, they can have some interesting moves. That's why I also want to look at them too, because they give you a great volatility. The only problem is some of the higher volume codes gives you good volatility as well too. Let's move this on to Bit Crystals, BCY. Okay, in this situation here, you had the nice little, well, depending on your version of nice is in how technical analysis is playing the story for you. The nice downtrend as it's playing through in here. Price action making its first move to the 18 average band since a decline on the 9th of February. It left it on the 27th of January, so there was a couple of weeks of downward momentum. The 2 days settling in after the gain has now had the price action barely but somewhat noticeably get above the band. Very difficult, I think, to sell using the strategy that I do here, because the high for the day right now is in at 7,100. And I don't think I would have settled for that. When the price would have been there, I would have wanted probably at least closer to 77 to 78. As an original sale on the stage, but no, you wouldn't have gotten that, I don't think. Let's take a look at a few other ones as well. Just quickly, I'll go through a few right now. Next one being, we'll do ABY, then they won't be so random after that. Because I haven't looked at ABY for a day or two, even though I own it. Yeah, so in this situation here, price action comes to the 18 average of highs. That's not a sell area. It's down here. This is not a buy area at all. So I will be selling ABY if there's a decent move above the 18 average of highs. The most notable spot right now is this level here. Because I last bought near these lows, I bought 140, I think. I would be looking to be buying probably closer to the 100 number. Maybe even a pair below if I want to choose to do even lower than that. But once the market gets way, way lower from where price action was, I pretty much have to buy. And the mathematical reason for this, just in charts, is if it gets down to here and you don't buy, and next thing you know, you have a nice little rally that goes up to like here. You're like, oh yay, it went up to 156. I'm up like 16 basis points from my last 140 buy. That's 10%, not much of a gain. But if I would have bought it at, say, 110 and it's 156, well, that's a gain of like over 30%. Now I can definitely look to sell that there, and next look to sell that 140 again back where I was originally planning to do so before. Just because I feel like doing some Fibonacci, it's been one of those days. I look at this chart and it quickly, what comes to my mind is, okay, obvious downtrend, obvious uptrend here, obvious downtrend here. We got this low in at 12010. So I'm going to bring my Fibonacci calculator up and type that number in. 12,010 as the low. And we're going to do a high of 17,480. This number will give me information on Fibonacci within these two sides. When I shorten out the time frame next, it'll also give me a downside target. That downside target is in at 95.24. I'll probably put a buy order there. I already own this as it is, so I'll just make sure that my buy order is somewhere near there. And that was done because my buy order was at 100. So I've just reduced it down to 95. Just a small reduction. But if I feel I'm just as able to get it there. And if one would even state, if it's a buy order there, it usually pierces extra. You can go to the 9. But I'll take closer to the exact number, just a small hair below, barely above the 95 number. So I want to take a look at the Fibonacci just from this low to this high. So let's first take a look at this on a 2-hour time frame, and yeah, does the trick. Key numbers. These are the two. 15, 1, 4, 5. This was the area which from this high was supported, then resisted, and is now falling from this area. Just over the last little bit, we can see that this has been support for about 8 periods in a row, which of course is the matching point with this, and was also the matching support from where it last lifted off its last leg higher. Next level of Fibonacci support is in at 13,861. And I'm just going to move it to the approximate area a little faster. So therefore, this will be interesting short term if you're into this, and I'm not really myself. I'd rather trade on the 400-minute time frame or later, 400-minute to 3-day, but usually the daily. But breaking down below here, if you see price action like 12.47 or 1.42 rather, 1.41, I'd be guessing it's going to go to the 138 and continue down towards this level. They usually pierce below it, like, you know what kind of pop you're going to get. I mean, you didn't get much on the last one. You got something. Not much, and this could still be your support area, and you're just at the bottom end of this range. Maybe this thing is going to go into sideways action where short term the play is to buy when the price is where it's at now, which is basically around 14.7 to 14.8, and sell the market when it gets up towards the 15.5 level. That could be, but you don't know that yet. It hasn't had any type of confirmed break of support, and it has only broken this level on a lower volume market by a microscopic amount at this stage as well. The volume, pretty microscopic, so it's one of those situations where you got the numbers, you look at your risk reward, and for the most part there's not much more you need to do with it, at least for me. AGRS, I would have drawn this in. I don't know if I did this during a video. I probably would have. But the market has broken out of this resistance area field. And here's a technical analysis situation where you've barely, or you've recently, not barely, and barely is usually the case when you recently break a level. You can see how the lines on over a half a dozen occasions works between the 252 handle, not including the highest one, up to 285, but up to here, 266. So 252, 266 area. How's that area going to act as support if it will? because for the first time since that leg higher, the price actions made it to the 18 average of lows. Okay, that's fine. And even if it supports around 216, you know what? That's all fine and dandy as well. And even normal, too, to come extra within the key levels. Pierce extra lower or higher. So I would be interested to see how this goes, because it's now at that stage for such to take place. If you see price action here, then just maybe might have a decent chance of picking up a positive play, realizing that oftentimes markets come back to where they came from. Here's Ardor, ARDR, which I got a bunch of drawings in there. I'm going to remove them on here now. However, earlier in this episode, I was talking about how when you have these big declines and you have this first test, you know, oftentimes I see it needs to find a way to settle in a bit before this thing can get going. So after this move higher, a few days, going down a little bit, we can take a look at this on a shorter term level. Maybe again work on some Fibonacci analysis. 400-minute time frame. It's not really needed to do the exact numbers, but when you're looking at what you hope, but you look at to see is that correct logarithmic scale. We're looking at, say, 45 to, say, 53. That's a gain of a bit over 20%. 53 here. Yeah, that looks about right. So 61.8% would be somewhere above here. It's already broken below it. This is a chart that after having its move higher has had a lot of indecision, because every single time it has had a move higher and it's had a decent one, it's been sold off very quickly in here. But when there was a situation to bring this back down in a really big failed move, fast move, Bart Simpson head shaped, however, whatever you want to look for, something that goes way up and way down. That's not happening either, because there were situations in here and in here where the market could have fell really big, but this rally happened, sold off really quickly. And here was a spot where if this was going to be again going down hard, this is where oftentimes you'd find resistance. It didn't do that. And now it's been grinding its way lower for a decent amount of time, but it's still above this current level of support. So it's a real battle right now being fought between the bulls versus the bears. And I guess good luck to the winners, all I can say looking at that chart. Well, of course, if the bears win, we'd be looking to have it move probably down to here. And if the bulls win, well, we at least got to get back up to this previous level. When you look at the majors, this is Dash on the 1 hour time frame. Basically been in a downtrend now since the last couple of days. ETC is mentioned. It's not one of the majors anymore, but it's still pretty big. On its daily time frame, it's having another test of this level. The more often you test a level, it's likely to be taken out. However, that doesn't mean that a play back down to the 29 handle is out of order, because that could very easily be what happens on a bullish move back to the level. Okay, well, we've tested it for a while, but maybe come back to it, meet up with the 18 average, then, wow, taking it out. That's a nice bullish setup. But either way, whether it just keeps on going up from now or comes back, I couldn't tell you how the next play would be, because normally at a big resistance point, I'd say, yeah, it's probably going to go down. As far as picking bullish or bearish here, I can't do so too easily. Ethereum, it's on the daily time frame, showing signs of barely starting to break down below this 18 average band. And we'll finish it off with some Litecoin. And I haven't seen silver since this morning, so I'll finish off with silver after Litecoin. Litecoin's still hanging in there against such. On the shorter term time frame, it's not, because I'm watching that all the time. And then, yeah, this is what I've been seeing. The price is going back down to the 180 level. Silver, how are we doing for the precious metal? 1652 on the 1 hour time frame. It's just messing around for the most part, but as I've been stating within this movement, we've been stuck in this 18 average since it came back down to it in October of 2016. Year and a half. Yeah, it's had some pierces above or below, but it's got to do more. It's got to hold and stay, well, below the 18 or above, or below the low rather, or above the high, for me to start to give it any precedence that it's ready to make its change. I know long term this thing is going to be going sky high in value, but I'm surprised that it's been in such a long sideways move in what I consider stage 3 of the correctionary state or the reversal trend, with stage 1 being band flattening out, stage 2 being establishing resistance, stage 3 come back to the band, and it can just hit the 18 average of highs quickly, maybe take 2 or 3 periods to come down to the lows, or even sometimes pierce below the lows. And I guess this time spend well over a dozen periods within this 18 average. It's building up a lot of energy the way I look at it on a technical level, though. So on a break of a resistance level like this, one could state that the amount of energy and moves available is a lot more than normal because of the amount of time in which it's spent in there. Thank you for tuning in to this evening's video, and have yourself a great day. Bye-bye.